Hello friends, this is Prateek from Investig, and today we're going to talk about a general portfolio allocation for someone who's 40 years old. I will start by saying that please don't consider this as financial advice. Please consult your financial advisor. We are just providing a very general portfolio allocation for someone who's around 40 years old. This should not be construed as the exact portfolio allocation because your ideal portfolio allocation will depend on your goals, your debt, your salary, a lot of different things, like your previous investments, income stability, etc. So please don't think that this is exactly what you should be doing. Please consult a financial advisor, but this is just some idea of where you should be. Um, this is after we are assuming that you have 6 months of emergency savings set aside, you are saving for your retirement. This is only considering the portfolio allocation for your investments. So when it comes to your investments, there's a general rule of thumb that just subtract 100 minus your age, and whatever comes is should be your equity allocation. So if let's say you're 40 years old, you should be somewhere around 60. Now, this doesn't mean you have to be exactly at 60. You can be at 55, 60, 65. If you can take more risks, you can be 70. If you want to be risk averse, you can be at 40, 50. But 60 is like an average portfolio allocation you should be when it comes to equity, and the remaining can be debt. So equity is more risky, gives more returns. Debt is less risky, gives less returns. Similarly, if you're 30 years old, you can be around 70% equity and 30% debt. So when we talk about equity allocation, again, you can read this blog. It's on our website. You can invest in Nifty 50, Sensex 30 stocks. You can invest in mid-cap stocks. If you want to go and if you want to be a little more risky, you can also invest in small-cap stocks. For mutual funds, you can invest in the equity mutual funds. It's very easy to invest in mutual funds these days. And then to diversify, you can invest 10% in like an international fund, gold, or you can also do some sort of real estate funding. But we have shown that you can invest in international stocks like S&P and Nasdaq. For debt, you can invest in money market instruments, short-term debt, long-term debt. Again, to repeat, this is assuming you already have 6 months of emergency savings. This is all after you have money left over for emergency savings. So you can invest in PPF, government bonds, corporate bonds, tax-free bonds. You can invest in mutual funds that are directed towards debt instruments. And debt, like I said, it has low risk and low return, and you can also get your money faster. Like it's more liquid than equity. So, friends, this was our general 2-minute summary of our blog on our website. What you should be investing in if you're 40 years old. Please like, subscribe, share our blog and on our website, and help us reach more people. Thank you.